Hey, how's it going, guys? Visual Trades. I'm back in action finally. Had some time on me, so I'm gonna provide you guys a really quick AMC update. Nothing too in depth, something that everybody can understand, and where I stand right now on the stock. All right. So ignore the Wyckoff separation. It always comes back to respecting the fib, man. I tell you guys all the fucking time. Like, sorry, I shouldn't curse, but um, Fib wins in pretty much every aspect. And I remember we were talking about how AMC's retracement level, which it favors the most, is the .786 level. And we actually saw that touch happen on December 3rd, right around 25.21. So because of that, I would expect there to be some sort of double bottom that happens over at 25.21, where we could confirm a clean reversal off of one of the macro candles. Now, what would that look like? Let me go ahead and go to like a daily candle. Ooh, that's a lot. Hold on. One second. So I want something similar to maybe like an inverted hammer, or maybe like just like a doji candle, something that will confirm that this level that we're at right here is unsustainable for continued downside, as we would see a lot of buying pressure come in, hopefully around this level. As you can see, this was a crucial level where we saw a dip down on the beginning, well, towards the end of May. Where the Bulls had held up to see a continuation of the run to the all-time highs up until June 3rd. So hopefully, if we don't see any surprise downside, then I would consider this a loading zone. However, I do take into account that sometimes we do stoop down to the .886 level on some of these retracements over here that I'll be able to show you on this chart right here. Actually, it's over here. Usually the .886 level, that's also a formidable retracement level for AMC as well, but it's also very respected in terms of oh yeah, here we go. It's also very respected in terms of where fib level is usually how can I say this? That retracement level is respected. There you go. Tripping. I don't know why it took me so long to say. But there were a couple instances, I believe it was right here. Yeah, if I were to take a retracement right here real quick. Let me go ahead and do this. I know, I'm so sorry. But as you can see, this .886 level off of this impulse, all the way up to this leg that we finished up and topped out at 44. When we retraced back down, we saw some sort of consolidation over at the .886 level before we saw a reversal continuation. Now, the thing that gets to me is the fact that since we did see some sort of consolidation around the .786 for a while, it would not surprise me if I saw a late year market sell-off happen where it affects us in our play, and we do see past the lower 20s into the high tens or teens, whatever you want to call it. However, the thing that concerns me the most is the fact that there is a gap right under 18 that would be filled if we were to stoop lower than this .886 level, and we would consider talking about the highs of this the last all-time high that we made in January. So nothing too concerning for the long term, because this is still bullish price action in essence. However, that is just something to look out for. Hopefully, if we can continue a strong market, that we would see a rebound around this .786 level, which is what I'm banking on. Yes, it would be considered a lower high. I mean, a lower low. However, if we were to reverse off of this .786 level, let's just say, somewhere right here, which is where it would kind of put us. Or wait, hold on. I'll do that wrong. There we go. So that would confirm like I think it's called a descending wedge, which is bullish. There we go. Sorry, I'm drawing it live so that way I don't get it wrong. Yeah, so if we were to see some sort of continuation, hopefully a hop above the .618 level would continue to drive us into a reversal momentum, so that way we would be able to break out that channel that was formed by this wick. So and this is way more bullish than the symmetrical triangle that we were in, because this gives bulls more time to load up. You have kind of a double bottom going on here, I mean, even though it doesn't really look like it, you can kind of consider it that. However, you know, some may say that this is also a descending triangle, which does make sense for the short term, for us to break down into a channel like this. There we go. So it would make sense for us to break down from this descending triangle for the multiple tests of support. I do not think this is going to hold. I really am hoping to see more downside on the retracement, so that way I could look to add. And I don't think that market catalyst will really affect the downside for this. This is just basic TA off of the fact that we were unable to close above the support level, which is between the 0.714 and the 0.65, which is a crucial supply zone that was made by the bulls in early August. So I would not be surprised if we were to retrace back down to the 0.786 on a quick snapback, maybe lasting about an hour or two, give us time to load up again. Shouldn't be anything too concerning. Let's look at the intraday values of the AMC. So I remember talking about this encapsulating inverse head and shoulders fractal pattern that was going on, and the first macro inverse head and shoulders that we broke out of is what we're actually consolidating under right now, in between the second inverse head and shoulders, the smaller one that we broke out of November 3rd. So it actually created a channel for us that we're currently, you know, sloping down for, which is good. We're still seeing the fractal, guys. So, like, my thing is, as long as I'm seeing the fractal, I'm expecting more upside. That's basically my thing. And another thing that I wanted to take away from this is for the 0.786 levels, if you're talking about that being AMC's favorite retracement, and you're talking about the 0.786 level retracing on a macro scale in respects to the all-time high, then I do feel that this would now be one of the official last loading zones before we do see some potential upside, or we would just see a complete failure breakdown into the low teens, which I highly doubt that they would let that happen. But if you're talking about 0.786 being the favorite retracement, then I would assume that the last sort of dip that we would get would be somewhere within this area, hopefully. So let me go ahead and make this a loading zone, so that way I could go ahead and sleep at night. There you go. All right. So there you go. So now we have respects of both of these necklines creating a channel for us that we're kind of ping-ponging in right now. Part of the reason why I'm not expecting more upside going into the rest of the week mostly is because of the Bollinger Bands. We saw a tightening of them along with a test of the upper resistance. We broke over the moving average on the 1 hour, and then we can also check multiple time frames for this, so that way we can see exactly where we are right now. See multiple time frames suggesting that we would see a reversal in the short term. Let me go ahead and check the 2 hours because they hold more weight. Same thing here. We do have a bounce off of the moving average itself. This makes me feel a little bit more comfortable that this isn't a top, because it doesn't show signs of reversal. It just shows signs of where we feel comfortable before we're reversing. If you're bouncing off of the moving average, as you can see, the Stochastic is about to flip to the downside. We also have some bearish candles form at the top. This is a gravestone. So yeah, so I'm not really expecting too many fireworks tomorrow, along with the fact that we're below crucial support levels. So would not be surprised to see the mid 20s. Hopefully, again, it just gives us more time to load up. I'm pretty sure most of our averages are pretty low. So if we were to talk about a test of the lower side of the Bollinger Bands, hopefully we do see some tightening, and I would not be surprised if we were to squeeze outward due to less volume. Sorry, I always get something stuck in my throat. But yeah, let me go ahead and check the 4 hour for you guys. Yeah, so this is what makes me feel good about the macro scale, is the fact that the Bollinger Bands we almost had a potential close on the outside of the bottom of the Bollinger Bands, along with a clear sign of a MACD reversal that may occur. MACDs are a little tricky, where sometimes you have the signal line separating from the MACD line, indicating a little bit more downside before we do see a complete flip. And on top of that, I wouldn't really consider this a loading zone just yet, just because of the fact that the both of the lines don't show comfort. I mean, a continuation of upside, because both of the lines don't show comfort above the zero. Usually that means that hey, if you're about to have a flip to the upside while the lines are above the zero, that usually means that there's going to be a bullish continuation for you to load up. As of right now, it's kind of looking like a weak attempt for into an ascending wedge, which is bearish. You also have a reversal candle on the top of the 4 hour, which just indicates more downside for tomorrow. However, I would not be surprised if we do see just a spark of upside in the beginning of the market and more downsides that close the week around the 20s. Let me go ahead and go to the day. Now this is what makes me also very excited to see some sort of double bottom happen. We're already at the bottom of the Bollinger Bands right now, and as you can see, we expanded outward on it, which Jesus Christ, I don't know, I just need water. But yeah, the Bollinger Bands are starting to expand outward, which means there's quite a lot of volume that's being pushed. How can I explain this? There's a way to explain it without seeming like I don't know what I'm talking about. But nonetheless, we did see above the average volume today, which is really good. Same thing with the MACD line and the RSI. We are technically oversold, but not to the point where this is a strong enough reversal for us to be able to see more upside, in my opinion, unless there was some sort of market catalyst. And yeah, that pretty much sums up pretty much everything that I wanted to talk about. So the main points being that I believe anywhere between 20 to 25 is like the official last loading zone of AMC. I'm calling it right now. And then on top of it, because I feel like there's just going to be one more just a push down before they try to consider the TA invaluable, when in reality we know what kind of play this is and what kind of games they are playing with retail. We're not going anywhere. That's pretty much all I wanted to talk about, guys. Appreciate you guys for supporting. Thank you very much.